Investors are running. They are fleeing from China. Why is that the case? What is the crackdown involved in all of this? And I'm going to show you why we are seeing what we're seeing with imports, with exports, with the stimulus that's going on, all of that and more. Let's begin. I'm going to show you some details right now in this video, and I wanted to begin with one of the most important, and that is called the China credit impulse. This is generally regarded as a very good indication, not just for China, but for the United States, because what happens in China after a few months ends up coming around. And so when you tend to see the China credit impulse at low levels, that means that there's potential deflationary forces coming towards the US. When it's at high levels, it's inflationary forces. And so right now, we are seeing a little bit of an uptick here, but it is still lower than where it was a couple years ago. So I wanted to make that very clear. The stimulus that we are seeing is front and center. We'll talk more about stimulus in a minute. I'm going to give you an overview of what we're going to see today as well. You need to understand that better yields are available in the US. You've got better short-term prospects in the US right now, and that has really changed the investor sentiment. I'm going to give you the Bank of America Fund Manager Survey and what they are saying. Who's that? What's that? We're talking about hundreds of these big time money managers, and they are the ones that are having hundreds of billions of dollars between them managing this. And so it's worth paying attention to, although they can disagree sometimes. Much uncertainty in China as the New World Order has emerged. So we've seen a lot of talk with the BRICS and everything, and the world, I believe, is trying to figure out where this all ends up. So uncertainty always creates, like in sales, you would want to create certainty so you can get the purchase. Whenever there is some level of uncertainty, you'd have people just kind of stepping back. And that's going on, no question, today. China and a handful of other countries are buying gold. I'll give you the details of that later on in this episode. And we have some crackdown concerns. All of these things are really key and actually intertwine. So if you stick with me throughout this video, I'm going to give you those details. We have the China credit impulse, yes. But what about this? China growth expectations back to lockdown lows. Are you kidding me? And this shows us that the average investor, the big investor, does not want to put their money inside of China now. But that might be changing. I'm going to tell you why. This is the truth, okay? China policy expectations are low, beyond measures, targeting real estate. You could see that. So 55% targeted stimulus for real estate property market. That's what they believe the policy will be centered around inside of China. This is where the market is hurting the most, no question. And so the average investor here believes that, overwhelmingly it's going to be targeted towards the real estate market, although that certainly could be where the most of it is. I don't think it's going to stop there. Biggest jump ever in US allocation versus emerging market stock allocation. And so right now, as I said a moment ago, you've got a lot of money flowing into the United States. You're going to get a better yield when money market funds are giving 5%. That looks very attractive as opposed to another country who they're saying, I don't know, what's the situation? It's a concern. So foreign investment has been fleeing China right now. So that's important. I'm not saying, it's all ending today. No, not at all. I'm just talking about very short term, and we got to pay attention to this, take advantage. So at the end of this video, I'll give you ways that you could be taking advantage of that, of course. But I want to show you something that I find often the media won't cover. Look, China credit impulse. I told you about that. And this is like, just to be clear about the China credit impulse, although I've covered it many times before, I know not everybody watches all the episodes. Imagine the amount of loans inside of China. That's what it is. It's a form of stimulus. In that case, loans inside of China over the GDP, so over the economy. But all you need to know is higher means more loans, lower means less loans. So when you've got those loans, that means there's productivity. That means that the engine is turning. So that's the first thing. And then we have this China new credit data. So when we look at all systems financing as well as new loans, both of these have moved up in the short term as well. China's August new bank loan jumped more than expected. More policy steps are also expected here. And so that's important just to see that they are going through the stimulus. And that is the key indicator, which we'll talk about in a second. We're looking at the property market. They want to extend more loans. We get that. Yes, China growth improved modestly in August as the policy measures helped the economy to stabilize. And that's what they've been looking for. Mortgage loans rebounded, which indicates that the rate cuts and the policy easing in the property sector helped to boost buyer sentiment. Very short term. I don't want to, obviously say that this is a trend now. It is too early for that, but we know that this is the case. Okay, so that's the one part. But I want to show you something else. When we look at imports and exports, when we see the balance in between the United States and China, it's very delicate, let me tell you. So we're going to talk about the imports and exports and wanted to show you something interesting. China now accounts for a smaller share of total US imports than back in 2016, while Mexico and Canada now account for larger shares. So this is comparing November 2016 to September 2022, and you could see it for yourself. It is important to note that I believe that this is probably going to get stronger. There's no question. However, doesn't necessarily mean that they're not dealing with China and that other countries are not going to increase their trade with China. This is just something happening between the United States and China. And of course, you are going to have more countries setting up shop in Mexico, not in the US, let's be honest. The so-called onshoring isn't really going to get popular. And factories are not going to open up necessarily in Canada either, but the point is Mexico can become a big base for China, and to bring those at least within a tariff-free environment. It is not without its problems. Mexico has its own issues, of course, and there's a lot of concern there on different levels, but that's happening. The data's there. Whether or not it's going to be good or not, we'll see. China's export slump eases despite global demand pressures. Okay, so things have changed. And all I'm trying to highlight is that in the shorter term, we have more stimulus measures that have taken place, all kinds of different stimulus. And we have data that has appeared to show that there's more lending going on, more loans, and that a lot of the different indications have bottomed out. When I looked at a bunch of different indicators actually just recently, it looked like they either bottomed or had started to come up. Too early for a trend. But if you pay attention, hit thumbs up on this video, you're likely to get the next video I do about China so that I can give you those details. Early on the trend, but I did see many different indications that this potentially, with all that stimulus they're putting in, could put a floor in, their economic weakness that they're experiencing. Dominating seaport trade traffic. I thought this was incredible, being somebody who's constantly bringing stuff overseas all the time, dealing with big shipments and things. And I'm always interested. And here you go. You could see the domination of China. This infographic visualizes the countries with the highest container port traffic. Looking at this, 263 million for China. What about the next one? The next one in line, number 2 in line, the USA, 61 million. Then you go down, Singapore, 37 million, South Korea, 30 million, and on and on. Okay. And if you want that, link in the description under the sources. It is very clear China dominates in this place. Why? Because there was this grand idea to offshore all that manufacturing to China so that we can lower the levels of inflation that people experience, so that you can go to the dollar store and buy something for $1 or $2 or even $5 now, that might cost, let's say, $20 or $15, whatever the case is, if you had to buy that manufactured in your own place. So, of course, this has been very successful so that people can buy a whole bunch of things they probably don't even need. Central bank gold buying continued hot in July. I know this is July, but the article is brand new. You're going to get older data because it takes a long time to move through. So this is the most recent data showing that. And you could see World Gold Council talking about Turkey. But if we go down to China, adding 23 tons, looking further and further through it, you just see that it's usually the emerging markets that are doing this. I think it's very important where, you're going to see, yes, Poland is doing that, China, Russia, Turkey, all these other countries, but it goes, really deep into it because there's a lot of buying, both for the consumption, but also for the central banks. So they're doing this on every level. So pay attention to that. And it shows you that they don't want to buy US dollar at least as much as they did before. Not just China, other countries as well. What is shadow banking? Unpacking the risks for China. This is a very serious concern for China right now because this is ultimately where it all ends. Okay? There are crackdowns going on right now. Crackdowns taking place inside of what they call the local government financing vehicles, these packages of debt that they've set up, all connected in, of course, with the real estate. There's these trillions of dollars out there. And apparently there's a lot of fraud involved with it. There's a lot of corruption as well. And so China is slamming down their iron fist to potentially rid themselves of this problem. I don't know what's going to happen. But in doing so, that puts a big question mark in front of investors. Do we want to put our money there? Yeah, that's a big contrarian bet, but do I want to? So that's the big concern right now. They've got trillions being hidden in these very opaque systems that you and I won't know anything about, and very few even on the inside will know anything about. So be careful. Watch this. This could, of course, unravel the whole deal, but it remains to be seen at this time. I wanted to let you know that if you want more details about, where do I get the best plays? Where do I look for the stocks and things that you may not see at the Money GPS, and you don't want to just trust in some YouTuber? Something really good that I have found recently. I have a partnership with Seeking Alpha. Yeah, you can look at the free stuff, the articles on their website, but the paid stuff, it's totally different. And you've got really good people writing articles in there, including Michael Gayed from the Lead Lag Report, who I interviewed. A lot of different people in there. In fact, their track record does speak for itself because in their alpha picks, they are at, I can show you here right now, 48% since their launch back in 2022, and the S&P 500 at 17.5. So they've been outperforming it. So, I joined the webinars that they have. I've done all these different things, and of course Amazon webinars as well. But what's really cool about this is that any piece of information for any company you're interested in, you're automatically notified. Very obscure stuff, you're going to be able to know about it and get some real details. If you want that, there's a link in the description. I managed to secure $50 off for this. Okay, just check it out. See if you like it. If you're a type of a person who wants to get into investing, this is a great place to start out. There's no question about that. Okay, take a look. Link in the description. All right. Now, for those who have been like, what's this Compass thing you're all talking about all the time? Well, Compass is now available to everybody on Discord. This is what it looks like when you first get to the page. So definitely check out the Discord down below. Click on that, and then under announcements, you're going to see the Compass right there. Please let me know what you think. I've had only a little bit of feedback. I want to hear what you have to say about Compass. Click that link, Discord, in the description. Now, you waited to this point in the video. I want to tell you what you can do. what you can do, of course, about this, all these circumstances. All right. A contrarian bet right now, I wouldn't go into buying Evergrande stock, of course, but a contrarian bet would be Chinese tech stocks. So if you think the bottom is in, this could be an opportunity for some people out there to get into Chinese tech stocks. I'm not suggesting it. I'm just saying it's a contrarian bet. Watch the imports and exports very clearly, okay? Specifically between China and the US, that's the number one. Why? Because less connection shows tensions in between the two. And whether that's coming in the form of soybeans, whether that's coming in form of, any sort of investment, this is a big concern. A lot of concern right now that we were experiencing, whether it's the Taiwan and China situation or, going deeper. Look for more stimulus, and the more stimulus we see, that is bullish. That's what the market wants to see. Investors want to see this. If China stimulates more, even if it's just small things here and there, that could be seen as very bullish. And so we could see that market going up higher. More stimulus means the whole world is getting stimulated. And so that can create more inflation in other parts of the world. I hope you appreciate this information. Let me cover what, for the comment of the day, I wanted to highlight everybody out of the 3,000 people that voted. I said, let me ask you the price of oil over the next 1 year. And overwhelmingly, people believe that the price of oil will go above $100 a barrel. And many people, in fact, 46%, have said over $150 a barrel. So thank you very much for voting on this and sharing your comments. Of course, I read them all. Very interesting stuff. I love doing these polls just to understand where people's heads at. 3,000 people on this channel are saying it's going over $100 a barrel. What about you? Let me know. I'll see you on the next one. Take care.